watching famous Dave on YouTube.
Good morning and welcome back. So after coming in yesterday with pretty much no position on, I looked at KOLD and later in the day, and it was up $3 or $4. Now, what happened before was that I scratched my position with KOLD around 50, so I figured with it up a few more bucks, if I reestablished, I figured I would reestablish the position with it up a few more bucks and essentially get long natural gas again from a lower price point. Let's go to the chart real quick here. If we look at the chart, and if I get out of the way for a second, natural gas has come down from like $10 all the way down to $2. And a lot of the reason that, am I live? Am I going here, folks? Do you guys see me? A lot of the reason that that KOLD was able to get all the way back up to like 78 is that natural gas was it was coming down from $10 and it was making these leaps of like down a dollar, down a dollar, down a dollar. Excuse me. And it's getting to the point now at 250, it can't just keep going down dollars and dollars, right? I mean, it's kind of like a coiling spring at some point. I mean, it can't go below zero. That's for sure. That's for darn sure. But also, if we look historically, it's back into a range where it's pretty close to its historic levels. Here is a natural gas chart from the last 20 years, and we can see the all-time low of 144. We're not that far from that, right? We're like a dollar away. So all these moves down, like from 10 to 8 to 6 to 4, blah blah blah. The all-time low is 144. So we're within $1.10 of that. And so my premise here is that this is going to find a bottom at some point. Now, it certainly could go below the all-time low, but the reason that this cold chart has gone back up from $9 to $78, $80 is because of this continued down move from 10. And we can't have that continuing because we're going to reach zero. That's the basic point. So what we can do here, just for interest, is we could overlay the chart of KOLD on top of this long-term chart. So if I go to studies, remove all studies, I have volatility on there, but let's get rid of that for now. And I go add study, compare with KOLD. And it looks like my keyboard is fixing the old keyboard here. So KOLD. You can see, it was all the way up here around I think it was up at like 1500 or something, 1100, something like that. But and that's including splits and whatnot way up here. But let's zoom in a little bit here. So in recent times, this was up around 700 in 2021. And I want to actually go to a different time frame even than this. Let's see, monthly. Let's look at 180 days. So we can see we were down here around it was down around 8 here in September, August, September, and then with natural gas way up higher here around $7. And as this down move continued, we see KOLD rip up all the way up here to I think it was a high of like 80 something. And but as I said, this continued down move just can't continue because we'll reach zero. So this has got to at least decelerate the down move, if not find a bottom here. And that's what this position is about here, is recognizing the fact that A, there's going to be beta drift on this product, B, it can't continue the down move, and thus looking for KOLD to find a top and to slowly start to decay back down towards $9 again. Now, it doesn't have to get to $9. You know, if we could go to 45, that would be useful. But I have just puts on. If we look at the actual position here, we'll pull up KOLD. We're starting to see elevated natural gas storage levels where we need it most. That's not good for this position. If we look at KOLD, we see all we own right now are 6 August 45 puts, right? And so I don't have my usual calendar on. I'm just straight up long these puts. Now, I would be looking to hedge them at some point, but for the moment, I'm just short via these puts. And the reason I chose August is it gives us some time. Now, I was looking at some other strategies, even sort of more aggressive. Like if we are going to accept the premise that over time KOLD is going to move lower, we could have actually moved, instead of the 45 puts, we could have done something like, you know, I can either buy the 45 puts, let's say at $12, right? I can either buy, so if I were to buy the 30 puts, then I could buy 3 times as many for like $4, right? But it really has to make a bigger move down for those to work. But that's a thought, right? Because we've got a half a year. We certainly could go through the 30 strike in half a year. And if you have 3 times as many of these, you would do better if we actually moved way lower. So let's take a look. Let's compare if we bought the 30 puts to the ones we bought. So here we have excuse me. Here we have the analyze page, and here's the 6 lot of the 45 puts. All right, so let's look at if we'd bought the 30 put. So let's go out to August, and I'm gonna click on the offer for the 30 puts. So now it brings it down into this analyze tab here. So let's do 3 times as many. So 3 times 6 is 18. So if we bought 18 of the 30 puts, so the delta actually would be already higher. We were looking at 145. We were looking at 145 costing us 26 a day versus this would be 218, but it's costing us twice as much a day in theta, right? So these are going to crumble to dust if we don't start making a down move soon. So it's a risk reward thing, of course. But let's see if we own these 30 puts, if this goes to, let's say, 25, how do we do? Now, I don't usually like to look at how we do on the downside. I like to look at my risk at losing money. But it says if it went to 25, we'd make $19,000 on the position. Now, if we were to switch those out and stick with the 45s, we would only make $14,000. So a difference of $5,000 if this goes to 25, choosing the 30 puts versus the 45. However, if this the reason to choose the 45 puts over the 30 puts is if this thing just rolls to like 40. So like let's see what happens if this just rolls to 40. So with the 30 puts, if this rolls to 40, which would be down 27%, we make, I'm sorry, this is with the 45 puts. With the 45 puts, if this goes to $40 from where it is now, we would make $2,800. If we are along the 30 puts, we'd make $3,600. So in this case, still, if it goes to 40, the 30 puts would be a better deal for us. What if it goes to just 45? Let's try just 45. So if it goes down to just 45, if we're long the 30 puts, we make 1900. If we're long the 45 puts, we make 1700. So in almost every case for the down move, it would make more sense for us to have bought these 30 puts than the 45. So that's an interesting thing to know. I guess one of the beauties of these 45 puts over the 30s is we could sell. It's easier to sell stuff against the 45 puts than it is the 30 puts, right? So with these 45 puts, we could go ahead and just sell next week's 45 puts against them, right? So if we were to sell next week's 45 puts against our position, the 6 lot, all of a sudden our delta goes down to only short 36 and we're collecting 70 a day. So if your premise is we're gonna stay in this range, you know, if you're selling these 45 puts, you really don't want it to go through the 45 strike, right? Because that you're just taking away all your bang for a buck if it actually does make that down move you're looking for. However, as long as it stays above the 45 strike in the next 7 days, you could collect this 70 bucks a day. Now, I like to look at the actual math here. So 6 times 7 is 42. So basically we're collecting $420 here if we were to sell these 45 puts against our position. And that's not a whole lot of money, but it's going to defray our decay costs for a week. So if we operate on the premise that this is definitely moving lower, but it's not moving lower. It's not moving significantly lower in the next week, and it's certainly not going to get through the 45 strike in the next week. Then we should certainly sell something against this position just to collect some, collect some income on the way down. The issue is just that if we do sell stuff against this and it does make that big down move in the meantime, then we're not going to make nearly as much money as if we just let it ride along the put. So that's why up until now I haven't sold anything against this. I think if this position goes heavily into profitability, then I will sell something against it to kind of lock in something. But as of now, if we open and close right here, it's probably just around break even because I put this position on. I bought the puts. Actually, it's probably a slight loser because I bought the puts versus 54 and change, and now we're 55. So I bought the puts yesterday and they went against me with KOLD going up $2 after I bought the puts. So that's kind of my thought process. Tell me what you think. I don't know a whole lot about natural gas, but I do know that the all-time low is 144, and we're not super far away from that. We're like a point away from that. And this has been going down by points and points, and it's in a downtrend now, so it could continue lower, and we could take out the all-time low. However, coming from $10 all the way down to $2, I wouldn't be surprised if we just had a little bounce back towards the mean. Not that we're going to get back to 10 or even 5, but 3 would work great for us. We saw the move to 3 less than a week ago, and that took KOLD all the way down to 41. 41 would be a huge winner for us. So this is kind of my thought process. I might do something like turn in a couple of the 40. I'm long 6 of the 45 puts. I might do something like trade in 2 of those for 6 of the 30 puts. That way I've got a couple of each type thing. In the meantime, look at Tesla's done. Tesla has, we were long Tesla for a long time and we bailed out of that, and Tesla has, well, now it's up $5 since the close, but it did get down all the way to 172. There's been so much talk about how Tesla doubled from 101 all the way back to 200. And it seems to be it's almost like it gapped to 200 from 101, the way people talk about it. And it seems to be partially at least filling that gap. We got down to 169 after the close yesterday. It's $8 off that low yesterday, off the close. But still, to my eye, the chart don't look that great, right? Now, this could be the low for a while, or it could just continue to grind lower. We're still before the open today, so it certainly isn't over. But the promising thing for us at the moment is natural gas is off the lows. We did make a short-term low again early this morning. Let's pull up nat gas on the minute by minute. This 246 was a current recent low this morning, but we are a little bit off of that now, trading 251. I'd really like it to stay above 250, and it would be great if we could, look, we got all the way up to 256. It would be great if we could get to 260 again, right? But just staying in a range and stopping its down move is a huge victory. We just want to find some sort of bottom here. I mean, even if we just move sideways from here, that the position would work with us moving sideways, and it would probably start to sell something against it if we continued to move sideways. But we got to see what happens. That's my thought process. I don't know. Do I sound manic? Does any of this make sense to you? Let me know in the comments. I have my little screen here with Boyle, and I started looking at the oil products as well as as my part of my watch list to start looking at how closely natural gas and oil correlate at different times. This is all new to me, trading this energy stuff. So it's like I have a little learning curve to complete here, which you can be part of with me. All right, so there we go for today. Thanks for watching, and have a great weekend if I don't talk to you. There's a possibility I might come on at 6 o'clock Sunday when the futures reopen. Because I used to do that, and I'm thinking about maybe starting to do that again, just coming on Sunday night late to talk about the week ahead a little bit. Let me know what you think of that. All right, thanks for watching. We'll see you on the next one.
You're watching Famous Game.